Yeah.
I know. Yep. You'll be all right, Steve.
Well, somebody portrayed to the public that we have everybody? There's only 4 of us, that's right. Yeah.
Right.
Microphone on. Call to order a regular meeting for the normal local liquor commission. Please call the roll.
Mayor Coos,
Here?
Mr. Fritzen, Mr. McBride.
Here.
Mrs. Cummings, Mrs. Lorenz,
Here.
Mr. Preston,
Here.
Mr. McCarthy.
We have 2 items of business on the meeting tonight, and that, well, actually just one, and that's the approval of the minutes of the regular meeting of March 19th, 2018, and approval of minutes of the special meeting of April 16th, 2018.
Move approval. Second.
Thank you. No changes or just that? Please call the roll.
Mr. McBride,
Aye.
Mrs. Lorenz,
Aye.
Mr. Preston,
Aye.
Mayor Coos.
Aye. We are adjourned. Call to order a regular meeting for the normal town council for Monday, July 16th, 2018. Please call the roll.
Mayor Coos.
Here.
Mr. Fritzen, Mr. McBride.
Here.
Mrs. Cummings, Mrs. Lorenz.
Here.
Mr. Preston,
Here.
Mr. McCarthy.
We'll begin with a pledge of allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. We've had no requests for public comments, so we'll.
We did have one.
Oh, we did have.
Carol Seamus.
I'm sorry. We did have one request. I was not aware of that. And Carl Sela wanted to speak to this group. I think that must have been the other
Must have
meeting.
been.
Yep.
Okay.
So we move to the omnibus agenda items that are considered routine and will be handled with one vote unless a council member would like to pull an item for discussion. And I'd like to be excused from voting on any bills I've incurred in my duties as mayor. And Mr. McBride.
I'd like to be excused from voting on any bills for expenses that I
Thank you.
incurred in my duties, and also would like to pull item M, please.
Item M.
M.
Ms. Lorenz.
I'd like to be excused from the line item of an expense that I incurred.
Thank you. Items. Did we get a motion?
We did not.
Motion for approval?
So move.
Second.
Items we're considering on the omnibus agenda are approval of the minutes of the regular meeting of July 2nd, 2018, and approval of town of normal expenditures for payment as of July 11th, 2018. A resolution to award the bid for a service truck with utility body for the water department to Lehman Chevy City at a net cost of $30,396, including a trade-in. A resolution approving waivers from the Uptown Design Review Code, Chapter 15, Division 17, for 202 West College. A resolution waiving the formal bidding process and authorizing the purchase of a Bobcat skid steer loader from Bobcat of Bloomington via the Sourcewell Cooperative Purchasing Program. A resolution authorizing a contract with Freehill Asphalt Company for the 2018 pavement crack and joint sealing, and that's in the amount of $29,134.34. A resolution authorizing the execution of an intergovernmental agreement with the City of Bloomington, the County of McLean, and McLean County Soil and Water Conservation District for the administration and implementation of watershed management programs. A resolution to appropriate $926,654 of motor fuel tax funds for the bituminous resurfacing of various streets for the 2018 MFT street resurfacing project. A resolution to appropriate $1,380,000 of motor fuel tax funds for the 2018-2019 Glen Avenue Bridge Reconstruction Project. A resolution authorizing a contract for with In-Situ Forms Technology for the 2018 sanitary sewer lining contract, and that's in the amount of $310,717.70. A resolution considering the release of executive session minutes from January 19th, 2017, July 5th, July 17th, August 11th, August 21st, October 2nd of 2017, and January 2nd of 2018. An ordinance approving a parking license agreement between the Normal Public Library, Rutherford Suites LLC, and the Town of Normal, and an ordinance adding Division 9 to Chapter 8 of the Municipal Code concerning the regulation of small wireless facilities. Please call the roll.
Mr. McBride?
Aye.
Mrs. Lorenz?
Aye.
Mr. Preston?
Aye.
Mayor Kus?
Aye. The omnibus agenda is approved with the exception of item M, which is an ordinance amending the fiscal year 2017-2018 operating and capital investment budget. Mr. McBride?
I don't have a question, but I was...
Motion for approval?
Oh, so moved, thank you.
Second.
Now, don't have a question, but I thought it might be appropriate for Mr. Hune to maybe walk us through this, if you'd be willing. Thank you.
It's certainly my pleasure to do that.
Andrew,
This is a
Andrew,
report.
your mic's not on.
Looks like it is.
There we go.
Yeah.
Now you're on.
It's my pleasure to do this for the council. This is an annual report that we do. The fact that it's annual doesn't make it any less important. In fact, it's a fairly summarized, comprehensive review of all the budget activity for the entire calendar or fiscal year of 17-18. To give you a little background on this, the council is the only authoritative body that can actually approve the budget. So in March, you approved the budget for 17-18 2 Marches ago. And then during the year, we have several budget adjustments that go on. In terms of practical reality, we can't bring you every budget adjustment to approve because there are many of them. So our process is it goes to finance first for review from department head. We look at it to make sure the account's correct, the budget's there, if it makes sense in terms of the department's mission and so forth. And it goes to the city manager's office for another approval. So there are 2 levels of professional approval at this. And then we wait till we get past the year in which we have closed 17-18, as you're aware, back in March. We're getting ready to wrap up the financial statements for the year, where we know there's no likelihood of a change in the budget now. So we bring all the adjustments back to you for your final approval to kind of close the loop on that formal approval from the council. This report distills all the budget activity of all the transactions into a single adjustment for every fund in total, and then we break it out by fund and by account, and then the report itself kind of distills that to a narrative to try to address the most significant budget adjustments that we had to give the council a sense of what happened during the year. I'm going to go through it with some detail to share you some information. None of it is something that you aren't aware of because a lot of it comes up as part of the budget process, as part of our annual work in finance for refinancing and certain things. So some of it will probably likely feel very familiar to you in terms of the information. So again, what we do is we have about 50 funds in the town of various operational and capital operations. If you look at this very first item in the report, we look at it town-wide. So what's the total adopted budget for the town? Where did it start at? Where did it end at? We started the total adopted budget for 17-18 for all funds was about $125.5 million. We ended, the ending budget for all funds was $132.2 million, so about $6.8 million of increase in revenue for the town-wide. So what created that $6.8 million revenue? Well, there's going to be adjustments that increase revenue and adjustments that decrease revenue. So we try to pull out from the detail what makes the most significant sense in terms of reality of what that net change is. In terms of revenue increases, it contributed to $6.8 million of a net increase. $10 million of that came from the bond refunding. So that it's kind of an interesting adjustment. We refund bonds. As you know, during 17-18, we refunded the 2008 bonds. We issued $10 million in bonds. We received $10 million in cash. So we need to increase the budget to receive that money. We also spent $10 million to pay off the bonds. So we have a $10 million increase in expenses. You'll see that later on in the report. So that doesn't necessarily have an economic reality in terms of a $10 million revenue source. It's not new. It's just a one-time thing that we do for the budget to recognize we can take that money in. The economic reality of that refunding transaction is smaller debt service payments, for life of the bond issue. But in terms of the budget adjustment, it's a significant adjustment that increases revenue, but doesn't really have a big economic reality on us in terms of finances. We also had some increases in our vehicle replacement fund that contributed to that $6.8 million increase. And we also had some increases in expenses for our health and dental fund. These were, increases in revenue. This was actually revenue that came in for health and dental. When a claim hits a certain point, we leave self-insurance and go into excess insurance, and that becomes essentially a receivable to the town or a revenue source. So once we pierce that level, we're no longer paying the claim out of our money, we're paying the claim out of the insurance money. So that insurance money comes back to us. Now, in order to get that, we need to have the claim expense, so it's kind of a wash. But again, that receivable, that revenue coming in from excess insurance represents a revenue that's an increase and an increase in revenue for the budget. In terms of major decreases at all fund levels, the biggest revenue decrease we had is general fund at $2.9 million. And that I'll go into a little more detail. That will all look very familiar to you from our budget process this year. And then, of course, we also had debt service project reserves. We had a decrease in revenue. That's the fund that general fund sends money to pay debt service off. The fact that we had the refunding of the 08 bonds decreased our need to pay debt service, so it decreased the commitment from general fund to that fund. So revenue was decreased in that fund. But it's a good thing because we're not having to fund debt as much. So there's some kind of ins and outs of these things that kind of make it a little challenging to review. So it's certainly appropriate and bears worth mentioning some of the detail on this in terms of a narrative discussion. In terms of general fund, we look at all the funds, the 50 funds together, and kind of pick off the ones that had significant increase and talk about those on revenue expenses. We also zero in on general fund specifically because that's obviously the most significant fund that we operate in terms of operating for the town. General fund had started with $66.4 million of adopted budget. We ended at $63.5 million or $60.6 million, so about $2.8 million decrease in revenue for the fund. And that is all entirely a result of us dropping back our projections for local sales tax, state sales tax, income tax mostly due to the 10% haircut that we received from the state last year. That's now been proposed to be half of that now going forward. And then also the Metro Zone money is entirely out of the budget. Now, this is kind of the last year that we showed it in the budget that we didn't receive it, obviously. So now it's completely out. And that created this almost $3 million decrease in revenue budget for general fund. Getting back to kind of town-wide budget, all of the 50 funds, the adopted budget for 17-18 was $132.5 million. We ended the year at $149.4. So that's a $16.8 million increase in budget for expenses town-wide. Initially, the reaction is, wow, that's a whole lot of money. Again, there's some smoke and mirrors there a little bit, if that's a good term to use. Significant adjustments.
Probably not the best.
Not the best term. That's right. Well, keep it lively at least. Really add some flavor. So again, what I'll say is significant budget adjustments that didn't translate into what economic reality of the adjustment itself. So by way of example, we mentioned we had the refund of the 2008 bonds. We have brought cash in, an increase in revenue. We paid cash out to pay the bonds off, increase in expense, $10 million, in and out. Again, the reality is we saw a savings from that, and we'll see savings for the next 25 years from a lower debt service payment, but the in and out of that has to be done to make the cash flow work. A second thing that actually increases the budget, but again does not necessarily impact the town's economic reality, is carryover. In this case, the Fire Station Capital Fund, as you recall, the fire station was completed, and we increased the budget in 17-18 by $4.5 million to finish it. That's not an increase in the project cost. That's simply money that we carried over from the previous year that didn't get spent on the project. The project came in at budget or under budget, but it wasn't all spent in the time we thought it'd be spent when we first planned for the budget. So we had $4.5 million of budget left that had not been spent yet on the project, put it into the new year, or the old year now, 17-18, and spent those funds. So again, big dollars in terms of numbers, but in terms of discussion, they're not hitting the impact of us economically. General fund, we did have a $1.3 million increase in expenses, which I'll cover in a little bit. And then also I mentioned earlier, the health and dental fund had an increase in revenue from reinsurance coming in for claims that pierce that level of self-insurance and that kick into the excess insurance. Well, in order to have that occur, we need to have claim costs that have that kind of level, which we did, and we had a little bit of higher claim cost than expected. That increased the expense budget for health and dental fund. And as you recall, the town also did refer to as an initial seeding to help, I guess you could call them, kind of migrate folks into the higher deductible health plan. So we did some seeding by employee and by family member there, and that was an expense that we felt was reasonable, but it did cost an increase in budget. And then decreases in expense for all the funds, debt service project reserve. Again, I mentioned earlier that the general fund had to give less money to debt service project reserve because of the savings from the refunding. Debt service project reserve had to pay less in debt service, so we have less money going out there. So again, that was a decrease in expense budget. And then some stormwater management projects actually got moved out of 17-18 that were not completed and put into the new year. We're in now 18-19, so that was a drop in budget. But again, that's kind of a carry forward to the new year. So hopefully you're getting a sense that there's a lot going on in terms of some high dollar items, but they all relate to a refunding, a carryover. They're all kind of explainable. Not to say that there isn't things going on here that have economic impact. Obviously, the general fund is the biggest piece, and when we see drops in revenue and income tax and Metro Zone, then that's real dollars that we have economic impact on us, and that was largely solved in this last budget cycle. In terms of expense budget for the general fund, kind of my last comments on the overall analysis report, $66.3 million of adopted budget for general fund, increase to $67.7 million, so about $1.3 million increase in the overall expense for general fund. Again, different accounts have increases, some accounts had decreases. In terms of expenses, probably the most significant one that we had that was an increase in the budget for general fund was the early payoff of the Portillo's obligation. The development agreement for that project allowed for the town, if there was financial wherewithal to do that, and it made sense to go ahead and pay that off early. If you can recall, that the town had an arrangement where we were going to pay the developer over, return the food and beverage tax to the developer over a period of time, probably about 4 to 5 to 6 years, depending on how they perform. We also wanted in that agreement the right to be able to pay that debt off because it was at 8%. So we thought it'd be feasible to free up that money in the out years and go ahead and pay it off now. That worked very well, and we did make that payment, but it did increase the budget by $1.6 million. However, it also freed up more than $1.6 million in the out years because we're not paying the interest anymore on that. Some more transfers in terms of general fund to vehicle reserve. Again, this happens every year where we have changes in cost values. We push things out, we move things around, we try to hit our financial targets. So we do some tweaking in those transfers to make sure that we're maintaining reserves that are appropriate in that fund and also still maintaining enough money to pay the replacement costs when these things come due. And those are changes that we pretty much do every single year. The last big item in terms of expense budget increases for general fund, we hit contractual services pretty heavily this year, and that was to accommodate the state's 2% surcharge to collect our sales tax, as well as some carryover projects for facilities and public works. In terms of decreases, again, there's a lot of interrelationship here. I hope I'm kind of explaining it at least fairly well. We had a decrease in the transfer to debt service project reserve. Again, that's all tied up in this idea. We have a savings in our debt service payment because of the refunding. So general fund commits less money. The fund that pays the debt commits less money to the debt service because of the funding decrease in terms of the savings from the interest and the refunding. Just some timing changes with the roadway fund, and then we always have generally some savings in salaries due to vacancy and so forth. That was kind of the main things. In terms of the year end, as I mentioned earlier, we're getting ready to, we've closed the year. The financials are in draft form. I just received them actually today from the auditors. We're going through them with a fine-tooth comb to make sure that things make sense. We estimated, we started the year for 17-18. Again, we're in a different year now, but we started at $11.4 million of fund balance. We were expecting to have a deficit. We knew that was going to occur as part of the budget process this year. We burned that down about $1.8 million, which is better than we expected, but still a deficit, which we were expecting, but it was better than we anticipated. So we'll start the year, or we started this year, 18-19, with $9.6 million of fund balance, which is, close to our 15% cutoff. So things ended the year where we expected them to end, a little better actually than we anticipated, which is always good. And this report, again, does its best to kind of distill all those adjustments into something readable for the council to essentially say, bless the adjustments for the year, and we have no more coming forward. So with that, that's kind of I'll offer any comments or questions.
The only thing I'll just add to Mr. Hune's comments, this ordinance basically memorializes everything that happened in last fiscal year. And when Mr. Hune started his comments, he mentioned kind of a process for how we go through budget adjustments and budget amendments, and starting in finance, starting with each department and then going to finance and the city manager's office. I will also point out that there are occasions when we bring things to the city council for approval where we also ask your permission to amend the budget. And if you look back at the minutes from the last meeting, street resurfacing is a perfect example. We asked council just last meeting to approve a contract with road construction for resurfacing and an associated budget adjustment in the amount of $21,000, $22,000. So you do that throughout the year, and this is the one ordinance after the year's over where we memorialize everything that happened in the last fiscal year.
Thank you.
Questions or comments on any of that?
Thank you, Andrew.
Please call the roll.
Mrs. Lorenz.
Aye.
Mr. Preston.
Aye.
Mr. McBride.
Aye.
Mayor Kus.
Aye. The item is approved. We have one item of general orders, and that's an ordinance amending the development agreement for Uptown Circle Phase 2.
The developer has requested that be withdrawn for the evening.
That item is withdrawn. We have one item of new business, and that is the introduction of the Friends Forever team members who are sitting in our front row here. So welcome.
I think we have a couple of representatives from the group. I have Vicki Kavanaugh and Steve Martineau that are along with the group, and I think you have some designated speakers. So come on forward.
Good evening. Thank you so much for having us here. My name is Vicki Kavanaugh. I am the site manager. That means that I am the person from the States who has the honor for these 2 weeks of accompanying 10 young people from Israel, 5 Arabs and 5 Jews, who are coming together to really do some important work. They do a lot of community service, a lot of building leadership skills, and at the end of their time together, they'll return home to implement a service project of their own back in Israel. And so without further ado, I present to you 2 of our students who will share a little bit about their experiences. Thank you.
Okay. Hi everyone, I'm Rania. I'm from Tuba village in Israel.
Hi, I'm Yogev. I'm from Be'er Ora in Israel.
Okay, before we start, we want you to join us for 3 deep breaths.
Because we are really nervous. So, 1, 2. Now we can start.
So So at first, I just want to tell you that YouGov is my first Jewish friend. And actually, when I just heard about this program, I didn't realize that it will be just successful, because we are from different religions and different many things. So, but after meeting her, I just realized that we are almost the same. We have many things in common. Also with her gorgeous smile, that when you just look at it, you smile immediately.
When I saw Rania for the first time, I saw her hugging, laughing, and just a lovely girl. And I immediately know that I want to be her friend, and she will always be there for me. Now, we are going to talk about similarities between our religions.
So the first one is the fast. Both of the religions have a special time in the year that we fast in it.
We don't drink or eat all the day.
We fast to think about all the bad things that we have done and how to fix it.
Also, we give money to poor people, which in Hebrew it's called tzedakah,
And in Arabic it's called sadaqah,
which have the same meaning.
and the same sound.
We pray to the same God.
Each of us has a special prayer to mark the end of the week.
On Friday, we dress up and eat a special meal in the evening. Now we are going to show you a painting.
Okay, so as you see, this painting has two sides, that they are similar and different at the same time.
These two sides are completely each other and have a little bit of the other sides too. It's like our relationships.
Everything we said to you today shows that we are all people made the same, even with all the differences between us.
Even with all the difference.
So we will always find something in common.
Thank you again for having us. I don't know if you have any questions for the students.
Questions or comments?
Just welcome. It is always, this is one of the things I think we all look forward to during the course of the year, so it's wonderful to see you here. Welcome to the United States. Welcome to the town of Normal. I am absolutely certain that tonight's meeting is one of the more exciting things that you will see during your trip. That is American sarcasm, but we're very happy to have you here, so thank you.
Thank you.
You all.
Wasn't that a fantastic budget conversation we had? That was enthralling. I just hanging on every word. But no, welcome to the community. Thank you for being here. This, to me, and I think to the council in general, this program is so vitally important to our community, and we're so lucky to have you in our communities. And the work and what you learn while you're here and what previous groups have learned is important to the world. And so it may not seem like a lot to you, but you do a lot by doing this and committing to it. So thank you.
Thank you.
All right. That concludes our business here tonight. If there are concerns or comments, motion for adjournment.
So moved. Second.
Please call the roll.
Mrs. Lorenz?
Aye.
Mr. Preston?
Aye.
Mr. McBride?
Hi.
Mayor Kus?
Aye. We're adjourned. And I think we would like to get a picture of Friends Forever students and staff with our council in front here. How about that?
Our 6 of
The speakers did wonderful.
Yeah, nice job. Everybody huddle up. You're fine. Push in like